Hello and welcome to the market update for Tuesday, September 16th. I'm Ricky Walters.
He's the mortgage wise guy, wise guy.
All right, so we're about to get a Fed rate cut tomorrow. The Fed's meeting today, and they're looking at the latest inflation numbers and how that's going to impact their decision. That's what we want to go over. We got their favorite measure of inflation, personal consumption expenditures, a couple weeks ago, and we saw that the headline number stayed at 2.6%, rounded from where it was. The core went up a tenth to 2.9 after it was rounded up. Big reason for that is a tenth higher in the cost of your money management fees. Not really, but you made so much money in the stock market, or the average American did, that those fees went up, and that's considered part of inflation, which doesn't make a lot of sense, but that's how it's measured. Then we got producer price index, and we got that just last Wednesday. As you can see from CNBC, wholesale prices unexpectedly declined a tenth of a percent in August as Fed rate decision looms, which it does. You can see the producer price index fell a tenth in August, and it was estimated to rise three tenths. And also, the previous month was revised lower than what was previously reported. This release provides breathing room for the Federal Reserve to approve an interest rate cut at its meeting, which they're doing today, and will announce their decision tomorrow on Wednesday, the 17th. We also got consumer price index, which is retail inflation after the wholesale inflation, and we saw that it basically stayed the same, 3.06 to 3.1, rounded is the same on the core. And the biggest component of that, a third of that, is owner's equivalent rent, which asks homeowners, not those renting their homes, but homeowners, what would you rent your home for without utilities and without it being furnished? And people tend to overestimate that number or that amount because they don't really know. And the aggregators of rents have been telling us that rents are coming down. So this is inflated in the inflation report higher than what it should actually be. All right, these are the run weights. Not going to spend a lot of time on that. So, what are the odds of a Fed cut? Well, pretty much guaranteed that they're going to give us a Fed cut tomorrow. That's what the Federal Fund Futures is telling us. A slight chance of a 50, a double cut, except it's only 4%. So, if you're a fan of Dumb and Dumber, you can say, well, there's a chance. And then we project forward for October. 80% likelihood, 73% likelihood from the federal funds futures rate, meaning that we've seen mortgage rates decline in the last 7 weeks from the high sixes to the low sixes and even into the fives. I'm locking some rates into the high fives right now for 30-year fixed. This is the 10-year Treasury yield, and as you can see, we had a wonderful decline, which is the benchmark for determining mortgage rates. What does that tell you that you should tell your buyers? Hey, affordability is improving significantly, and it's probably going to continue to improve as the Fed lowers rates. Do not wait because it's bringing more buyers into the market as they hear about this. Tell them, do it. Marry the home now, divorce the landlord, and you can date the rate and refinance later. That's what you should do. I am Ricky Walters. I am your
He's
mortgage
the
wise guy.
mortgage wise guy, wise guy.
Have a wonderful week, and I'll see you next time.